In the case of a great reset where everything defaults and, we need to start over, being the world's predominant hydrocarbon producer by a wide margin gives you a great seat at the table for the great reset. And we have trillions and trillions of natural resources and other advantages that would position us well for a global reset as well. And so even though we might be short-term bullish the U.S. economy and long-term bearish U.S. treasuries, that doesn't mean that in the long term we're bearish to the outlook for the U.S.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for February 5th through February 12th, 2024, while supplies last. This week we have silver Valcambi or Asahi 100-ounce bars at just $1.39 over spot per ounce. We also feature pre-1933 gold $10 and $20 Liberties at $89 over melt and $139 over melt, respectively. Next, backdated 1-ounce silver maples are at $3.75 over spot with a minimum order of 50. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Doomberg from the very popular Doomberg Substack, the #1 paid financial Substack contributor. Doomberg, thank you so much for joining us today.
Elijah, great to be back with you. I must say, I'm impressed by the new digs. This new podcast studio you've built is really on brand.
Yes, doing some traveling here at a family's house, but yeah, it's a fun background here. So I appreciate that. I did want to discuss today one of your recent articles you wrote about the G7 confiscating $300 billion of assets from Russia. Essentially, this is planned to happen February 24th. And your perspective then, how it will impact relations with Russia and also the financial system in general, because I know Russia has obviously been part of the BRICS that have, and the BRICS nations have been accumulating gold pretty aggressively. And there's been a lot of speculation about gold being used in the future for a financial system that could really be separate from the West and the West's ability to confiscate or just seize assets. Your perspective on this?
Yeah, as you say, we wrote about this topic. I believe it was published on January 13th, a piece titled Golden Resolution. And the overarching theory of that piece, or through line of that piece, if you will, is that if gold is going to have a big breakout against the dollar, 2024 would seem to be the year for it to happen for a variety of reasons. We led that piece with the prospect of the G7 countries potentially moving forward with escalating from a mere freezing of the $300 billion of Russian assets that were in Western financial institutions at the time of the outbreak of the war in Ukraine, moving from a freezing to a full seizure. And the sort of the headline use for those funds would be to continue to support the war effort in Ukraine, basically to take Russian foreign asset reserves and give them to Ukraine to continue to fund the war machine. This comes at a time, of course, where Congress seems to be opposed to the open checkbook, never-ending funding of the Ukraine initiative that the Biden administration had enjoyed in the past 2 years. And we had written about this earlier, and I believe we discussed it last time I was on your show, about how the ejection of Kevin McCarthy from Congress might be something that the Democrats might come to regret having participated in. And we're seeing the consequences of that now as the new Speaker of the House seems quite resistant to the concept of stroking another check for Ukraine, especially as it looks as though Donald Trump will become the presumptive nominee for the Republican Party. And so backed into a corner, the Biden administration seems to be pushing its European allies to seize the Russian reserves as opposed to just enjoy the benefit of having frozen them. It remains to be seen whether that will happen. I must say that many in Europe have grave doubts about the wisdom of executing such a historic and we would argue potentially devastating move on the part of the G7. I think it perhaps overestimates who holds the real power here. And it should also be said, of course, that there's probably a roughly equal amount of Western assets stuck in Russia today that Russia would basically just go ahead and seize for themselves with full justification. negating the negative consequences that the West thinks they would be imposing upon Russia, but still leaving the West with the blowback and the negative consequences that such a move would entail. Namely, I think it's pretty undeniable that would weaken the attractiveness of Western debt instruments as central bank reserve assets going forward, and it might cause certain countries who may have been in the crosshairs of U.S. geopolitical tensions in the past to ponder the wisdom of owning any assets in the Western world, and such a sort of event horizon singularity type move to basically seize $300 billion worth of assets of a nuclear superpower, I think it opens the risk aperture to significant unintended consequences that perhaps those who are proposing we do so are failing to consider.
When Janet Yellen was confronted about the U.S. putting sanctions on Russia, the response that she had was that, Russia and these other countries, it's not feasible for them to actually bypass the U.S. dollar. What's your perspective on that? What kind of control does the U.S. actually have over the dollar-based financial system? And is it easy or is it feasible for these other nations just to bypass the U.S. dollar?
Well, it's a situation where if you have a network effect where enough people decide to do it together, then I think suddenly the entire edifice crumbles. And it's the kind of power that you'd like to threaten but never use. And we would argue that the move to fully confiscate and hand over to Ukraine Russia's reserve assets would be a literal use of that power that would eventually diminish its effectiveness over time. And per the original question, this, of course, would increase gold's attractiveness for a neutral reserve asset, and the total global market cap, if you will, of gold is probably too small today as measured in US dollars to serve that role effectively, which many in the gold community would hope would mean that gold would be repriced higher in order to serve that role. And I think that is the sort of underlying interest in this move that many in the gold community have. I should complete my first answer by pointing out that the vast majority of these reserves are not, in fact, in US dollars or British pounds. They're in euros, and they're sitting in European banks. And the hesitancy on the part of the Europeans to follow through with this is because they would be the ones that would be kind of left out on a limb to suffer the greatest of consequences. And they've already suffered substantially because of the crazy sanctions policy that we've implemented and the fact that Russia seems to be gaining momentum on the battlefield. Last I checked, the border or the front lines between Russia and Ukraine were far closer to Europe than they were to the U.S. East Coast, for example. And so something like 80% of these reserves are sitting in Europe, and we've not seen a healthy appetite for the Europeans to embark on this path. And that's why I started my answer by saying it remains to be seen whether it will happen.
Definitely. It seems like a risky move in a lot of respect because it puts not only the US dollar in jeopardy, it seems like in this case, it would really be negative for the euro.
Yeah. And look, it remains to be seen. This is not a sign of strength. If we take a step back, if the war was easy to sell in the Western world, and the return on the investment that we've already made was clear and apparent and widely supported, there's just no question in my mind that leaders of the G7 would be even pondering this because it is fraught with risk. So this is in reality, a desperation play. And actually, we think one of the big reasons we find ourselves in this predicament is because we got the sanctions policy so wrong, which is something that we have written about extensively, and in fact is the subject of our next piece. It's crazy that, from the earliest days, we've been pointing out just how wrong-headed our sanctions policy was, and yet here we are 2 years later. The Russian economy is booming, the European economy is in recession, and Ukraine's losing the war. And I think if we had gotten the sanctions policy correct from the beginning, as we had been advocating, perhaps we would be in a much better position where we would not need to resort to such extreme measures and risk the unforeseeable negative consequences if we decide to pull the trigger.
It seems like also that the value of these currencies like the US dollar and the euro have a lot to do with the confidence that other countries have in, the US's and Europe's military power, right? And if we lose the war with Ukraine, what does that then mean for the currencies involved?
Well, it's not bullish, but there's questions beyond that. There's the kinetic war that's unfolding in the Middle East. And I would say that we have observed with interest the fact that the U.S. has not decided to strike Iran directly as a consequence of the attack on the U.S. base, which is somewhere very close to the border with Syria and Jordan. The initial reports that the base was in Jordan, but there's some questions in that regard. We would view that as an overt act of de-escalation on the part of the Biden administration, which we would applaud, because I think going to war with Ukraine would be it would certainly be a very dangerous risk. I hesitated. Sorry, with Iran. Sorry, yes. And that would be a significant risk. And so we noted over the weekend that they waited till the oil markets closed and they only bombed targets in Iraq and Syria. And now they're bombing targets in Yemen, but they have not yet struck Iran directly, which the likes of Lindsey Graham have been calling for. And if they had, I think we would see oil at $10 or $15 a barrel higher today. And we aren't. And we would probably see gold a lot higher today, and we don't. And so I think there's a tug of war within the Biden administration where the sort of neocon wing, who never saw a war they didn't like, is pushing for, severe escalations, whereas the cooler heads are pondering whether or not we might be a little overstretched given the weaponry and artillery that we've committed to Ukraine and the use that those weapons have been put to, and whether or not the U.S. military can fight across all of these different fronts, let alone gear up for a potential confrontation with China over the Taiwan issue. And so we don't have unlimited weaponry. We don't have unlimited, soldiers. One has to prioritize. And so we thought that the Friday night activities were rather bullish for peace and bearish for spreading of the conflict in the Middle East. And for that, we think, cooler heads have indeed prevailed.
That's encouraging, because it seems like, at least when I look at the mainstream media, that these strikes against Iran linked militias, obviously not in Iran itself, seem to be an escalation of the war. But your perspective, it's a de-escalation because the strikes are not in Iran itself.
Yeah, look, I mean, domestically, Biden wants to talk up how tough he is being without risking further escalation. And that is our view. And you won't see that in the New York Times or the Washington Post. But I think that's one of the things that people come to Doomberg for, is that sort of unbiased view of what politically is going on. And there was a huge amount of pressure on Biden to strike Iran directly as a consequence of the deaths and injuries that occurred as a consequence of this apparent drone strike at the base, apparently in Jordan. To Biden's credit, or to his handler's credit, I think they've tried to thread the needle. But part of that threading of the needle is to work the domestic propaganda front hard to make it seem like the U.S. has extracted its pound of justice. We were watching very carefully for whether they would strike Iran directly. And the failure, and you see it in the oil markets today. I think there's a bit of a relief, bearish move in the price of oil, because some of the risk premium has been removed from oil as a consequence of the fact that we don't have a hot kinetic war with Iran and the U.S. today, which had to be priced in as a possibility, at least, whether or not it was the base case.
Now, mentioning oil, I know last time we had you on, you were talking about how lower oil prices is very good for the economy going forward in the short term. Do you have any updates on that? Because it seems like we haven't seen a spike in oil, and we've seen relatively low oil prices since this conflict in the Middle East began. So can you give us an update on your outlook here for 2024 and its impact on the economy? Yeah,
and beyond oil, in fact, the subject for the next piece is natural gas in the U.S. in particular, which has, of course, sunk hard because of Biden's LNG export pause, which obviously isn't affecting the flows of molecules today, but is an important signal to the market that when push comes to shove, Biden will protect the home front at the expense of exports. And that's why we see Henry Hub natural gas at $2 per million BTU and change, which is an incredible number, Elijah. That's, 12 $12 a barrel oil equivalent for one of the most valuable hydrocarbons on the planet. We're just running some math before I jumped on this podcast. U.S. natural gas production is 7% of total primary energy production globally. And most of it is used on the home front at highly advantageous prices. Our view, this is why we're not seeing a recession. This is why we see strong GDP prints. This is why we see strong jobs reports, and people who are sort of conditioned to think or believe or hope that we're heading into a recession because their political objectives are such that Biden would lose the election, for example, best recalibrate those hopes and interpretations, because with $2 natural gas and 110 to 115 BCF per day of production, the U.S., with its fully integrated downstream manufacturing base, it's just a powerhouse. You know, we're going to show in this piece again that we'll publish tomorrow, or the day after, hopefully. Just the sheer volume of combined heat and power cogen facilities that are feeding our chemical plants, our fertilizer plants, our steel plants, our heavy manufacturing plants at such advantageous energy prices compared to the rest of the world is just a huge advantage. This is why we're seeing manufacturing jobs accelerating in the monthly payroll reports. I think the U.S. has done some very good things in spite of the opposition from Biden's EPA and so on. And so heading into an election year, of course, Biden is going to try to take advantage of that. And so beyond oil, which is incredibly cheap given the geopolitical risks on the menu today, natural gas is an even bigger story. It is truly remarkable in the U.S. Now, there's risk to that. We've become ever dependent on it. We produce 40% of our electricity. It feeds all of the plants that I talked about. And if shale natural gas were to turn over, like our good friends at Gehring and Rosenzweig are predicting, then that would be a real crisis for the U.S. But today, the markets aren't pricing a crisis. And in the short term, it's incredibly bullish for the U.S. economy.
And kind of like what we were talking about last time, there are competing forces at play here, one long-term and one more short-term. Short-term with energy, it seems like it's very bullish for the economy because we can have all this cheap energy here in the U.S. Longer term, we're looking, last time we talked about the U.S. debt crisis that we're in right now. You know, we've been talking about how countries are moving away from the US dollar, moving away from the West because of these seizures of assets and these sanctions that have been put on Russia. So did you want to talk about that? How it seems to be a bit of, I guess, different outlooks here, but one is short term and one seems to be more long term.
But also, I would argue that in the case of a great reset where everything defaults and, we need to start over, being the world's predominant hydrocarbon producer by a wide margin gives you a great seat at the table for the great reset. And we have trillions and trillions of natural resources and other advantages that would position us well for a global reset as well. And so even though we might be short-term bullish the U.S. economy and long-term bearish U.S. treasuries, that doesn't mean that in the long term we're bearish the outlook for the U.S. And in fact, if we could ever get our political situation in order, which I suspect we will at some point, the U.S. has an amazing repertoire of advantages on the global scale that is almost incomprehensible. And it's a shame that we're doing all this with a hand and a half tied behind our back. I mean, we can't drill off of California. We can't drill off of Florida. We can't really drill in Alaska. We can't build pipelines. We fight with each other over stupid and irrelevant things. We have this bureaucracy that is a parasite on the economy. And despite all of those things, we are producing more hydrocarbons than any country has ever produced globally by a factor of 2 or 3. Since the shale boom alone, we've added 2.5 Saudi Arabias, which is stunning to think about. Imagine what we could do if and when we decide to get our act together. And so even if we confiscate the Russian reserves, and if gold goes to $5,000 an ounce, and if we have a political revolution in the U.S., and even if we have some talk of recession amongst the states and so on, it's still an incredibly bullish place to be with amazing infrastructure, institutions, history. I think we'd get our act together. And if we ever did fully, I mean, look out on the global stage. So there is China, Russia, Saudi Arabia. They all quickly fall by the wayside of a united United States with a professional diplomatic corps working closely with our Western Hemisphere allies. Draw a circle around NAFTA and you have everything you need. It just really is an amazing place. And I do think it is. People have become susceptible to the negativity and the dopamine clickbait of social media to always see the worst in our country, in our leaders. And we would say that if we could buy the security of the long-term viability and potential of the United States, we would be all in on it.
Do you think there's a move then away from globalism in this respect and more towards nationalism, where we see the U.S. still strong in and of itself, but the cooperation with other nations may be lessened based on, the debt crisis and also this move away from the dollar?
Yeah, again, I think the move away from the dollar is going to be contained, obviously, to the people that need to. I think the G7 and the G20 largely will remain within the dollar system. I will personally remain within the dollar system, and I suspect so will you. And it's not going to go away. It just might have some competitors. And in order for those competitors to arise to the level that those countries would like them to achieve, you need to have gold at a much higher price. It's sort of the theme of our piece, a golden resolution that we published in mid-January. That's not to say that the U.S. just goes away, the dollar system goes away. And I do worry that sometimes our discourse is sort of too bipolar. It's A or B with no shades in between. I think that there could be a trend where much of the global South moves away and diversifies into their own system, a bifurcation, so to speak. But that doesn't mean that the U.S. dollar isn't still strong, the U.S. economy isn't still dominant, the U.S. military isn't still a powerful force around the world. And for sure, U.S. energy is just, it's difficult for me to describe the consequences of adding 2.5 Saudi Arabias in 15 years, which is what the U.S. has done. And again, with a hand and a half tied behind its back. Like, we have the technology prowess to apply what we've learned across resources that are politically off limits today. Imagine if those limits are lifted. We're just in an amazing spot. And we are proactively, I think, at the, with full cooperation of the U.S. military, beginning to onshore, friendshore manufacturing that we have allowed China to monopolize for too long, because the military has correctly decided that this is a national security risk that needs to be closed. And so we're seeing this boom in manufacturing construction that many people who think we should be in a recession are denying. And now we're beginning to see the translation of that construction boom into a manufacturing jobs boom, which was very clear in the last U.S. jobs report, which, again, many people who believe that we should be in a recession are twisting themselves into knots to try to describe as fraudulent. Our view is the difference between an analyst and an advocate is how they react to facts that disagree with their initial assumptions. And we consider ourselves analysts, and our objective is to learn the truth. And so in that mindset, there are no bad facts, only facts we don't yet understand, and that we should work very hard to understand. Whereas an advocate sees facts inconsistent with their position as something to rail against or to decry. And we think that more people should be analysts than advocates, because you should react to the facts as they present themselves, not as you hope them to be.
Definitely. And it's important to play the cards you're dealt, really regardless what they are. So we really do appreciate that nuanced approach that you take to analyzing the economy, the energy market, and also obviously the gold market, as we've discussed in this interview. Do you have any maybe last thoughts for our viewers when it comes to kind of playing the cards they're dealt, analyzing instead of being an advocate? And how do they then, as you look into this 2024, what kind of questions should they be asking themselves when they're looking towards investing, right? Because obviously you mentioned gold could be something that rises, but what other fields are you looking at? What other sectors are you looking at right now that look positive in your view?
Yeah, so in a world where the U.S. has an excess of primary energy, anything immediately derivative of primary energy is not going to be something you want to invest in, because it's basically a glut. And so things like fertilizer and corn and soybean and so on, these derivatives of energy are not in a situation of shortage. And so you'd want to stay clear of that. But this is why we see the Magnificent Seven and the S&P 500 galloping away, despite all expectations to the contrary. Because when you have an abundance of energy and you have forward integrated downstream manufacturing, value-added manufacturers tend to do well. And that's what we're seeing in the stock market. And so my main overarching advice is don't fight the tape. Don't try to convince yourself that the tape is wrong. The tape is right. Markets are right. You should observe the price signals you're seeing. You should observe the headlines coming across the tape. You should not look for political conspiracies. This is reality. And it's always, always significantly higher alpha to play reality than to fight it. That's our view on the markets. And this is learned through many hard lessons. This is not some wisdom we were born with. This is through the fire of making mistakes and assuming that we know better than the markets. You don't know better than the markets. The GDP print is real. The jobs report print is real. All of the puts and takes that all the people that are in denial of those prints are publishing on. It's just you could always take apart every report in that way. Don't fall for that trap. Play the pieces on the board as they are, like you said. The tape is real. The market is real. It's a much, much, much better way to deploy your investment dollars, in our view, over time.
And in general, typically the markets are reacting to those numbers regardless of whether they're real or not, right? So that's something maybe to consider, is that people are believing the numbers, and whether they're real or not maybe doesn't make too much of a difference. What's your take on that?
Yeah, I would say it's better to be financially right than intellectually right. This is just the way the world works. And is there some massaging of data? And sure, has the U.S. Economic reporting system become too much like China over time for our comfort? Absolutely. But you got to play the tape. Like, don't fight the tape. It's like fighting the tape is worse than fighting the Fed, in our view. And so the tape is the tape. Play it as it rolls across. And we learned this from our good friend Tony Greer, who's beaten this into our skulls at every opportunity. And he's right. Like, you just if you're like, again, we don't invest in the public market, so it's easy for us to say, we're mostly private investors where we can deploy sweat alpha, as I've described on several prior appearances on your show. But having observed people who are playing in the markets today and are just insistent that the U.S. must be on the verge of a major recession, and watching them, short and lose as the S&P keeps climbing higher, you got to play the tape, and the tape isn't wrong, and the markets aren't wrong. It's far more likely that you're wrong than they are. That would be the one piece of advice I would leave you with.
All right. Well, we really appreciate your time, Doomberg, as always. If our viewers are interested in learning more, they can go to doomberg.substack.com. Link in the description. Please inform our viewers what they'll be able to find there.
Yeah, give you a little preview. We're on the verge of a major rebrand, so it won't be doomberg.substack.com forever, but that's something I'll save for when we formalize it, and I'll come back on the show and tell your viewers. But for today, doomberg.substack.com is the home of all of our articles. We publish 6 to 8 pieces a month. It's home to our Doomberg Pro page, where our premier subscribers get, in addition to our articles, a very in-depth, detailed presentation on a monthly basis, which is very popular amongst those subscribers. And it is also home to all of our podcast appearances, including all of our appearances on your show, which we enjoy doing, under our Doomcast tab. So you'll find our full archive, everything we've ever written, all of our notes, and so on, at doomberg.substack.com. And Elijah, as always, it's a great pleasure to be with you, and looking forward to the next time.
Fantastic. Well, Doomberg, thank you so much for your time, and God bless.
Same to you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for February 5th through February 12th, 2024, while supplies last. This week we have silver Valcambi or Asahi 100-ounce bars at just $1.39 over spot per ounce. We also feature pre-1933 gold $10 and $20 Liberties at $89 over melt and $139 over melt, respectively. Next, backdated 1-ounce silver maples are at $3.75 over spot with a minimum order of 50. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.